We're talking supply and demand trends for gold over the next decade, as well as price projections with my next guest, commodities analyst Mu Li with CPM Group. Joining me from New York now is Mu Li. Mu, nice to see you again.
Thanks for having me, Daniela.
Mu, I know CPM Group recently put out their gold long-term outlook, which looks at supply and demand trends as well as price projections. As we will enter 2014 soon, how do you see the metal moving?
What we're seeing now is that gold prices have headed toward its first annual drop, and the past after sharply rising for the past 12 years, and in this year, what we're increasingly seeing is that investors are exhibiting higher level of price sensitivity. And that coupled with a rising supplies from a few gold mines that are expected to ramp up in the next few years is going to exert a downward pressure on gold prices. So we expect gold prices to weaken over the next couple of years, from 2013 to 2015, and later on from that, prices are expected to recover.
Mu, you mentioned a ramp up in mining. In which areas of the world do you foresee this?
One of the biggest contributor to gold mine supply has been China. Over the past couple of years, what we've seen in this country is that it has generally produced gold at a greater rate compared to the earlier part of the decade. Gold mine supply is expected to grow at double digit this year. So currently, China is the largest producer of gold.
Let's look at the demand side now, Mu. Results were out from the Diwali festival in India. That's the period where gold is traditionally bought in the country. What are we seeing in terms of demand come out of India, one of the biggest buyers of the metal?
We do see a strong seasonal tick up in gold demand from India. But as we've seen also in other emerging markets, the pace of growth in gold and jewelry demand in general has been slower compared to where they have been historically. This is in India. We have the import taxes, and also there is other government restrictions that is kind of hurting demand right now in India.
Mu, so if we look at price trends now, what does CPM Group forecast for 2014, 2015 for gold?
We expect the prices to weaken in 2014 and 2015. Nonetheless, after this sharp price decline in 2013, we think that price declines will be slower pace in the next couple of years. So prices are expected to average around 1,300 in the next couple of years.
Mu, that's longer term. If we look now at the shorter term, from now until the debt ceiling extension, can we see volatility for the metal?
Typically in December, January, we see a lot of ups and downs in gold prices in general. However, on the other hand, we do see a lot of fabrication demand coming from emerging economies such as India and China. And during those 2 months, it's going to be a stronger season in terms of gold jewelry demand. And so that will likely to offset some of the bearish factors in the gold prices.
How about if we look at central bank buying now, Mu? Are we seeing any new trends here? Are there any new players that have emerged that are surprises to you?
We've noticed that central banks have been reducing their net purchases in 2013. So altogether, they bought roughly 3.5 million ounces. And that is sharply lower than where it have been since 2008 when the central banks become net buyers. So the volatility in gold prices obviously is one of the factors that caused the slower purchases from the central banks. So we've seen a lot of these banks adopted a wait-and-see mode.
All right, that's all the time we have left. Mu, thank you so much. And for those interested, CPM Group's Gold Long-Term Study is available for sale on their website. Mu, thanks for being with me today.
It's nice talking to you, Daniela.
And thanks for watching this edition of Commodities Confidential. You can email us at newsfeedback@kitco.com or tweet me at Daniela Cambone. Thanks for watching.